Welcome to Deloitte's Debriefs webcast series in Asia Pacific. Our webcast today is from our Geography Update series and is titled New Labor Codes in India. My name is Alok Agarwal and I'm a partner with Deloitte India. I have the pleasure of hosting today's webcast. I have along with me today my colleague Atul Mittal, also a partner with Deloitte India. You may access our bios on the left side of the screen. Before I introduce the agenda for today's webcast, I would like to take a moment to highlight some of the features of our webcast console. First, all users are on listen-only mode. If you have any content-related questions, you can submit at any time in the Q&A box at the bottom right of the screen. We will do our best to respond to your questions during the presentation. Second, all PC users can maximize or minimize each box at your convenience during the webcast. You may also explore the icons at the bottom of the screen. If you want to download today's slides and related publications, please go to the Downloads and Links box. On the other hand, mobile device users can view the slides and answer the survey on screen. Finally, if you require an attendance record for this event, you will receive an automated email with CPE certificate after watching for 50 minutes. Next slide, please. Now, looking at the agenda, let us give you an overview of today's session. We will start with the FAQ issued by the Ministry of Labour and Employment in December 2025, which contained clarifications on wages and key points from the draft rules issued by the central government under the Code on Social Security. After that, Atul will cover some updates on the Industrial Relations Code and the Occupational Safety, Health and Working Conditions Code. And then we will have a very interesting panel discussion along with 4 leaders from industry. Next slide, please. Now, that brings us to the first polling question of the day, which will help us better understand profile of our participants' organizations. So the question is, how would you describe the nature and scale of your organization's operations in India? Please select any one of the first 3 on the nature of the organization's operations in India and either of the last 2 options on presence across states in India. So you need to select 2 out of the 5. While we are waiting for the results to come in, this question reminds me that our panel discussion today also has panelists with experience in both services as well as manufacturing and in organizations with presence across multiple states across India. We'll just give it a few more seconds so that we get... Okay, so we have a fair number of participants with both manufacturing and services, as well as multi-state presence. Now, moving on to the next slide. Let us start with a very quick overview. The focus of today's presentation is on updates after the labor codes were implemented by the government in November 2025. So as you can see on this slide, the 4 labor codes had subsumed 29 of the earlier legislations. The central government has pre-published the draft rules under each of the 4 codes in December 2025. And at this point, we are awaiting the final rules to be issued by the central government, as well as the state governments will follow with their rules under each of the 4 codes. So with that quick overview, let's move on to the next slide. Now, as you can see, this slide captures the structure of the definition of wages under the Code on Wages. which forms a very fundamental basis for applicability of various contributions under the labor codes. So you have exclusions from the wage definition, and from these exclusions, we have the first A to I, which are highlighted in blue. These are exclusions that are capped to a maximum of 50%, and uh, any excess over 50% is then included in wages. So this is an important concept for us to understand as far as the definition on wages is concerned. Now, as is mentioned on the right side, if the allowances and benefits except for gratuity and retrenchment compensation exceed 50%, the excess amount is added back to wages. Now, one of the key clarifications that was issued by the ministry is that performance-based incentives, employee stock option plans, variable part of the component of reimbursement-based payments will not form part of wages. So this was a welcome clarification, given that these components would introduce a lot of variability to the wages under the code. Moving on to the next slide. Now, this is again a very important aspect which was covered by the ministry in an illustration mentioned in the FAQ. As you can see, the basic and DA was indicated at 20,000, allowances at 40,000, and gratuity and retrenchment compensation at 16,000. So all allowances, including gratuity and retrenchment compensation, came to 56,000. Now, as per the FAQ, the excess of these allowances, including gratuity and retrenchment compensation, excess of allowances, which is the 40,000 rupees, over 50% of the total of 76,000, which is 2,000, was the conditional inclusion. And that's how the total remuneration, less exclusions plus conditional inclusions, came to 22,000. Now, this may be a different approach as compared to what the definition indicates. One of the most important points here is, as per the definition in the code on wages, the understanding is that only certain allowances that were indicated in the exclusions as per the previous slide are supposed to be considered as exclusions and subject to the 50% cap. Now, as per this FAQ, it seems to indicate that all allowances can be considered as exclusions. So this is a very significant point to note, which may reduce the overall amount of wages as per the definition, and one needs to see how this comes out subsequently from the government in the rules, etc. Right now, as we noted, this is only an FAQ, and this is a significant point to watch out for, which will determine the final wages for implementation. Now, moving on to the next slide. Another significant point that was captured in the Code on Social Security rules was certain components that can be excluded from the scope of wages for the purpose of gratuity contribution. Now, this is an explanation to Rule 34 of the Code on Social Security rules. What it indicates is any payment payable on an annual basis that is linked to performance or productivity of an employee or of the establishment in which he is employed and is not part of the remuneration payable under the terms of employment. So as you can see, this is similar to the clarification that we just discussed, which was covered in the FAQ as well. So basically, performance-based pay is indicated as excluded. Then if you see the subsequent components, reimbursement of medical expenses, stock option benefits, creche allowance, telephone and internet reimbursement, and value of meal vouchers, will also not form part of wages. Now, these again are welcome clarifications because some of these would introduce a lot of variability and uncertainty in terms of what would be the wage for the purpose of calculating gratuity. So none of these components were specifically listed as we saw in the exclusions earlier, but they are clarified as per the draft rule in the Code on Social Security rules issued by the central government as not forming part of wages. Moving on to the next slide. Now, this is a quick snapshot of some of the changes or updates that came in after the initial implementation of the codes in November. So as we know, earlier, the Provident Fund Act was not repealed along with repeal of the other legislations. The government subsequently notified that the PF Act is also repealed. So that was just a technicality. It was meant to be repealed initially, but that was creating some ambiguity, and that was sorted. So the PF Act is also repealed, and the provisions under the Code on Social Security are applicable as far as Provident Fund is also concerned. The next important point was on the guidance issued by the Institute of Chartered Accountants of India on accounting for additional gratuity provisions for past service liability. This was a very important guidance issued by the Institute to enable employers and companies to determine the appropriate accounting treatment for the additional gratuity provisions for past service liability, given that the December quarter results were going to be published at that point of time. The next one is as far as ESI compliance is concerned. There were a few circulars on ESI compliance, and the final position after those were issued and clarified by the ministry in the FAQ is that ESI compliance is required as per the Code on Social Security from November 2025. Employers need to look at how to operationalize the compliance, but it has been clarified that the compliance is very much required as per the new law, which is applicable from November 2025. In the interest of time, I will not cover some of the others. We've covered some of the key points here. Now, the next slide, please. This is an important point, which is as far as the creche facility is concerned. Now, as we know, this is a requirement under the maternity benefits law. Now we have Rule 38, which is issued under the maternity benefits chapter of the Code of Social Security rules, which has now relaxed the requirements under Section 67 of the Code. So under the Code, it was mandatory for establishments to have a creche facility, but this may not be practical for all employers who are being covered by the mandatory requirement. And considering this practical challenge, in a welcome move, the draft rules under the code have indicated that where there is no sole negotiating union or a negotiating council, majority of the employees of the establishment can enter into an agreement with the employer for a creche allowance to be paid. Now, the minimum allowance which is stipulated in the rules is 500 rupees per month per child, but this is just the bare minimum which has been stipulated, and it is subject to agreement between the employees and the employer. Now, moving on, let's look at the next polling question. Now that the new labor codes have been implemented, let's look at the status on review of your employee compensation structure. So the options are, we have started evaluating the alternative components. We are not contemplating any change to the compensation structure. Let's say if my basic salary or wages are already 50% or above, that may be one of the reasons many companies are thinking of leaving it as it is, although there may be an unintended impact in that situation as well. The third option is we have concluded on a new structure, but will implement only from April 2026. Next is waiting for final rules to be notified. And the last option is already rolled out the new structure. So please select any of these five. So just as a heads up, Atul, I'm going to be handing over to you after we see the results of this question.
Sure.
Just giving it a few more seconds while we get a few more results here. Okay, in the interest of time, we will move. So we can see that the first two options, started evaluating alternative components and not contemplating any change, seem to be the majority. Uh, and there are a few who have concluded on a new structure and already rolled out as well. But as expected, that is a minority. So with that, Atul, handing over to you for taking us through some of the updates on the other two codes.
Alok, when it comes to changes made or brought in the IR and OSH code, it starts with first and foremost thing from the of the previous position of core and non-core activity. Now they have absolutely clarified, made as a part of code itself. Okay, look, any contract labor are prohibited to work on core activity, and core activity has been defined as an activity for which the establishment has been set up, including their ancillary and necessary and essential thing which is required for the purpose of carrying out core activity. However, the exemptions are being provided in case the organization is able to demonstrate that either of the three of the exemption which has been provided, you fall into that, you have the good case to be continue to hire contract labor for the core activity as well. These are the normal functioning. If the normal functioning of the establishment is such that the activity is ordinarily done activity are such that do not require full-time worker for major portion of the working hours in a day or longer period as the case may be, or there any sudden increase in the volume of the work in the core activity which need to be accomplished in a specified time. For any clarity, we can approach to the ministry also for the purpose of invocation of particular section is open to advice. Further, what will not be core activity, support function like catering services, maintenance services, pick and drop facility services, medical services within the organization, services other support function which do not require full-time arrangement. Then it comes to issuance of mandatory issuance of the appointment of worker within 3 months from the date of notification of the code. However, in the rule itself, now they have clarified, look, this need to be issued within 3 months from the date of finalization of rule, and the appointment letter should carry minimum disclosure like PF number, ESI number, labor identification number, UN number, and certain other terms and conditions. Those are required to be applicable now onward on the employer and employee or the worker, on the employee and the worker. Next welcome change has been made from the perspective of overtime. First and foremost, as per the previous law, a worker is required to work in an organization for a period of 9 hours. Now that time period has been reduced from 9 hours to 8 hours. It is made applicable to every establishment only in the case of a worker, and where the worker is working for more than 8 hours, they are entitled for overtime, which is equivalent to twice of the normal wage. In addition to that, overarching limit has been 2 places has been provided. No worker is allowed to work more than 48 hours in a week, and in a quarter, not more than 144 is allowed to be worked as an overtime. Spread over interval is allowed, but mandatory as per the previous rules, but they are now come back to us again from the perspective of, or at the time of finalization of the rules. The expectation is after continuous working of 5 hours, minimum half an hour break has to be provided, interval has to be provided. But Initial, when they've issued the rules, they have provided. Now thereafter, they have said the rules are yet to be followed up. Then it comes to compulsory health checkup. It is applicable to factory in a hazardous industry. Practically speaking, it is not applicable. It is not currently applicable to service industry. And the health check rules and regulation is providing it to provide annual health check, help for the purpose of health examination or test free of cost to the employees of such age or such employees for establishment it pertains to. And the limit has been fixed as a 40 years, meaning thereby a person working in an organization, particularly in a factory or a mine or a dock worker or in a construction and building construction industry, person attained the age of 40 years. That means beyond the age of 40 years, it is compulsory for that person to have the medical examination and checkup free of cost at the cost of the organization. The new concept of negotiating union has been introduced. What at present you are required to carry out, any member or any worker who is a member of a trade union, they can come to you, that is an employer, come to the employer for the purpose of negotiating or representing the rights of the worker. Now they have introduced the concept of negotiating union stroke negotiating council. If 51% of more of the worker of an establishment are member of a particular trade union, that trade union per se shall be considered as a negotiating union, and that negotiating union only henceforth is entitled or required or can deal with the management of the employer or management of the organization for the purpose of representing the right or dealing with the right of the worker concerned. Now we'll move to the next slide. Then it comes to the mandatory. Apart from the trade union provision, now it is made mandatory for every establishment having a 20 or more workers to constitute a form a grievance redressal committee. That committee is there for the purpose of entertaining the interest or a complaint from an individual worker. And we need to keep in mind that member of the committee should not be more than 10, and equal representation from the employer and the worker has to be there. Time-bound manner disposal of the redressal or complaint has to be made, that is within 30 days, and decision taken by majority of the worker shall be final and binding. This is a new concept which has been introduced. It needs to be complied for every establishment having 20 or more workers working in an organization. Apart from that, the new concept of reskilling fund has been introduced. Over and above your retrenchment compensation, which you are required to pay as per the retrenchment, which is 15 days equivalent wage of each completed year, the new concept of reskilling fund has been introduced with an overall increase in the workers' retrenchment compensation. That compensation shall be equivalent to the 15 days last known wage that need to be first contributed to the government within 10 days from the date of retrenchment, and within 45 days from the date of retrenchment, government will credit this amount, transfer this amount into the account of worker. The concept has been introduced from the perspective of upliftment of the skill of the worker with an objective so that they should be trained properly, so that next time they should not face this kind of problem, if at all it is on account of some quality issue or the training issue. But with an intention and objective also, there is a mandatory requirement. If within 1 year from the date of retrenchment, if new opportunity of similar work arise, that need to be filled by giving first preference to the retrenched worker, and thereafter they can hire other ones. This is a new concept introduced. That means additional 15 days cost need to be bear in mind in case any retrenchment or lockout is taking place. Then widening the scope of the appointment of the safety officer. Earlier it was applicable when any factory where there are 1,000 or more workers are working. Now this has been curtailed down. For factory, the limit has been reduced to 500 or more. For hazardous process and building construction, it has been reduced to 250 or more. And for mining, 100 or more. And duties of the safety officers are being provided in detail. And the rules, which is yet to be finally notified. With this, time has come to go to the next polling question. That the expected impact on the workforce profile in your industry sector. Permanent employment will relatively increase. Flexible model will relatively increase. Fixed term employment will relatively reduce. Reduction in contact stroke contingent workforce. No major in the no major change to permanent flexible mix. Open for vote. Yes. Alok, should we? I think now, yeah, these are the results. Oh, great. Majority of them you have said no major change in the permanent flexible mix. Percentage is increasing, then decreasing, and decreasing. Interesting result. Oh, great. Now, in the interest of time, I would like to hand it over to Alok back. Alok, over to you.
Thanks, Atul.
Alok,
Next slide,
can you hear
please.
me?
Yes. Thanks, Atul. So interesting to see the results. Now, very quickly, this is a snapshot of the compliance activities required by employers as per the compliance handbook issued by the ministry recently. This is, of course, only under the central rules and would be relevant for organizations which have the central government as the appropriate government. So, for example, banks, etc. It's a useful handbook for employers to see various compliance requirements, and this particular slide focuses on the filings at various periodicity. So with that, we can move to the takeaways, which will be the final slide before we get into the panel discussion. So this is a quick snapshot of what employers need to keep in mind while planning for implementation under the new labor codes. In the interest of time, we will not get into the individual points here, and you can refer to these offline so that we can get started with a very interesting panel discussion. So let's move to the next slide, please. So I'm sure our participants are waiting for this portion of our session today. We are delighted to have many seasoned leaders as part of our panel with very impressive profiles. But in the interest of time, I will be giving a very brief introduction so that the participants can get the most of their insights. Starting in alphabetical order, Aman is India head of the People BNY, which many of us have known as Bank of New York. He has held a variety of roles, including in Barclays and FIS, and also has work experience in the US. Hemant Sharma is director for APAC and EMEA regions. His experience includes HR shared services with specialization in payroll and benefits with global organizations such as Infosys, Capgemini, Credit Suisse. Next, we have Reshma Parida, Senior Director, People Experience, India and PGS Australia. Her role as Head of HR in Pfizer covers all Pfizer businesses in India, commercial, manufacturing, R&D, global functions. She has deep industry experience with global corporations in pharma and life sciences. Vineet Jain, Senior Vice President Finance, focused on value creation at Warburg Pincus India. He has held finance leadership roles, including in Medtronic and PepsiCo, and brings that wealth of experience into the private equity industry. So once again, many thanks for joining our Dbriefs webcast. We are really excited to have all of you with us today. Just a quick audio check for everyone. Reshma, Hemant, Amol, Vineet, if you can just say hello.
Thank you for having us on panel.
Hi, good morning, Atul.
Hi, morning. Can you hear me?
Yes. Thank you. So, as the participants would note, we will gain insights from HR, finance, and payroll functions, which are critical given the wide-ranging implications of the labor codes. And their comments are, of course, based on industry experience and functional perspectives. and are not meant to relate to their current organization. So let me start with a common question for a few. It has been 3 months now since new labor codes have been implemented by the government. There are a number of well-meaning and these codes. What is your view on some of the most impactful areas of these labor reforms for the Indian economy and from a long-term perspective? So let me start with you, Reshma.
Yeah, Alok, thank you so much. And thank you for inviting me for this panel discussion. I think, if we look at the new reforms, right, from an industry perspective, I think, and from the economy perspective, I think they're very welcomed in spirit. But I think there's a long way for us to really decode the codes to really go forward and to understand, what's the real impact for any companies or any sectors that we have today. But I think, from the spirit of the reforms, I would definitely see India getting stronger in protecting the employee base, but also making sure that our practices are well poised for foreign investments to come to India. Yeah, so I think we are looking at a global trend which is here.
Thanks, Reshma. Vineet, could you go next?
Sure. Thanks, team, for inviting me. Sorry, I'm at the airport, so there will be a little bit of noise. Bear with me for now. I think if I just summarize it, after the GST, the most important reform is this, and this kind of unified the states from all the laws that exist. For me, if I had to take out anything, if you look at the number of acts, 29 to 4, number of sections, some 1200 to less than 500, rules, returns, forms, everything is cut down from more than 50 to 90%. So I think the compliance burden on the industry will be much, much less than what it used to be. The important thing would be how we execute these on the ground, with the states doing it the way they're supposed to be doing it as a one unified industry. Look to this more importantly because it kind of provides a level playing field for this all the states.
Thanks, Vineet. Hemant?
Okay, I think Reshma and Vineet have covered it all, but I will just add to it. The best part is now that India is going to be part of the global ecosystem. Now we are going to align our policies with the developed countries, with the Western countries, and this will also facilitate the ease of doing business in India. As Vineet just now mentioned, an employer had to go through 29 different acts and laws, which are now unified into one standard wage code with a one licensing. So definitely it's a welcome change. And it also, to be honest, secures the social security for employees, for the workers in India. So it is a welcome change for employers as well as employees. And definitely it was a much awaited change.
Amol?
Yep. Thank you, Atul, and good morning, everyone. And thank you, Atul, for calling me here. So the way I think about this is in 3S, which is simplify, secure, and sustain. And I'm hoping this will drive the Atmanirbhar Bharat, which our Prime Minister keeps talking about. And in my mind, this is more like, the way I'm thinking about this is wages, social security, safety, and relations. 4 different buckets, one integrated regime, hopefully will make compliance simpler. And some of the things which I was reading is that it might bring simple returns and a lot of digital tools for us. So I'm looking forward for this.
Thanks. So great points. As we all agree, I think very, very progressive and positive direction of these codes. Now moving to more specific questions, and let me come back to you, Amol, to start with you. So now that the worker definition has been expanded in the scope and it has applicability beyond factories as well, how do you see some of the requirements for workers? For example, you have overtime payments as well for the capability centers with these so-called workers as defined under the new codes. Amol?
Hello, are you able to hear me?
Yes, we can hear you now.
Great. So the way I'm thinking about is that, specifically from a GCC.
Okay, we have an audio issue, I think, with Amol. Maybe we will come back to him. So in the interest of time, I'll just move on with the next question to you, Hemant. So Hemant, how do you see organizations looking at gratuity schemes now that the underlying base will be wages instead of basic salary? And also any quick comment on leave encashment as well?
So again, I would say, Alok, it is a welcome change because now the wages have been clearly defined and the organizations can structure their comp structures in a way where it is clear. Definitely, it's going to increase the actuarial liability for the organizations. That's a given. So it is not only the gratuity output, the gratuity amount is going to be increased for the workers, but now, as we are also aware, it's not being capped at 5 years. So even at 1 year, completion of 1 year for fixed term employees, the gratuity will be applicable. So the actuarial cost, or I would say the accrual cost for the organizations is going up. But definitely it is a welcome change because it's quite defined and it is now clear. So I would go back to the first comment where we had so many laws governing. There were contradictory laws and acts and sections which always kept us confused. As an organization with this, at least I'm clear of what is expected. I'm clear this is a one time change. As Vineet said, after GST, this is the biggest, I would say, reform, and this is definitely welcome. We can align our wage structure, comp structure in a way where we are clear of what is required. So definitely, this is going to increase the cost for the organizations, but at the same time, it is giving clarity and it is helping us being compliant with the law of the land. The only, I would say, confusion that we have at this point in time is how much variation will there be in the state laws, if there is. Like the central law is perfect and it's confirmed, but we'll have to wait and watch and see how much variation we see in the state laws once the states start publishing their particular rules. How much difference will that be? Because for an organization like ours, which is operating out of more than 5-6 states, it is going to be a big decision making point. And on the leave encashment, I would say again it is clarity for the employer as well as the employee. Now we know what is expected. An employee knows what to expect, and an employer knows what is the calculation. Because till now, probably we were doing in India, we were practicing, I would say, at least 7 to 8 different type of calculation when it comes to leave encashment. But now there are some cappings, there are some thresholds, there are some basic guidelines that everyone has to follow, which is, I would say, clearly defined and is going to help us. Definitely, there will be organizations who are doing over and above, which is, I think, always aligned with the law. But what is required as a bare minimum is cleared, will be, I would say, clear. I mean, good for the employer as well as employees. So this is something again will help us in restructuring our comp. I'm sure every organization is going through that churn. So while restructuring our comp structure, this is going to help us.
Thanks, Hemant. Reshma, coming to you. For the manufacturing sector, do you expect a transition on workforce planning due to restrictions on using contract workers for core activities? So, for example, do you see organizations now looking at using fixed term employment model instead for core activities, or any related comments?
Yeah, Alok, thank you for the question. We did see the poll, right? It was very interesting to see the poll results where, the fixed term or the, contractor workers' response to those poll questions. I would say yes. I think, the workforce design will change. It will need to, be looked at a little more differently now. But I think there are multiple other aspects, right, for organizations to look at, especially manufacturing, because a lot of our line work happens with technical skilled people, labor work, which is not really, the engineers of the world, but they are the ITIs or the skilled worker, as we call them. So I think it'll have to go back to the I would say to the drawing board to really categorize the what's the definition of the kind of labor or workforce that we would need. It'll also be important to understand what are the core roles and what are the non-core roles, because it also ties up to the regulations of these, four buckets. And one of the buckets which comes under for manufacturing is the Factories Act as well. We'll have to look at the Factories Act. We'll have to look at the OSH guidelines as well to understand what is core and non-core, especially for regulated, highly regulated industries, manufacturing sectors like ours. In the pharma or the life science spaces, we have the US FDAs as well. So, there are certain rules which are absolutely core to the manufacturing part of our business, where we do not, by rule, we cannot have a contract a workman there. So I think it'll have to go through major changes, major redefining. But I think following that, right, Alok, I think, and I think Hemant said this, the accruals on, the shift patterns which will change, the overtimes which will change. So that there's going to be a financial impact both on top line and bottom line. So I think we will have to monitor that very, very closely. And especially industries, manufacturing industries, which are really, export or EU, as we call as export units, we call as. We run 24/7 operations. So we also have the diversity agenda, which has to be looked at from, a number of work hours and, things like that. So multiple things, too early to say how would the ratio look, to be very honest. But I think, yes, we have started looking at our workforce. We've started looking at planning the workforce in a different or modeling different scenarios for us to understand every impact, both from the organization perspective, but also from the colleague perspective. So yeah, I think more to come on this.
Agree, Reshma. It's early days, and we'll have to see how this pans out as organizations, dive into these issues further over the next few months. So I'm just checking if your audio is back, and I can ask you the question once again. Quick
Sure,
audio
Alok.
check, Amol.
Maybe we can try once. Yes, maybe we can try once.
Yeah, this is fine. So the question is, now that the worker definition has been expanded in the scope and applicability beyond factories, how do you see this playing out for capability centers, which will now have workers as defined under the new codes?
Yep. So I was thinking about it in three different spaces. The first is we will have to do an audit in terms of who are the workers, because this is first time we would be getting into that space. The second is the whole HRMS technology which we have. We need to fix it, to ensure that some of these things can be incorporated. The third is the whole cost, because it will bring extra cost for us. And the last piece is the consent, because when I was reading about it, if I remember it correctly, there is a consent which is required to do this overtime going forward, which is a absolutely new thing. And I think not only the technology and the managers, but the employees, all the three has to be ready to get into this space. So there are multiple things which are there. And I think more to come on this, but these are the way I am thinking about it right now.
Thanks, Amol. And let me bring in Atul here. Atul, one question for you is, parts of this was covered by some of our panelists in the last few minutes. How do you see the state rules under the Occupational Safety and Health Code interplaying as far as the working hours is concerned?
See, Alok, it is very clear. The code prescribed for 8 working hours. And further, if you see the initial... Yeah, can you hear me? Am I audible? Hello?
Yes.
Yes, you are. You are, Atul. Yeah.
Am I audible?
Yes.
Alok?
Yes,
Yeah.
you are.
Yes.
Yeah. Yeah. If you see the code, they are talking about yeah. If you see the timing perspective, they have reduced the hours from 9 hours to 8 hours. Initial rules was talking about after completion of 5 hour, half an hour interval need to be given. But the fresh rule which has been issued for public comment was no reference was there from the center rule perspective. And if we see the rules which has been almost notified draft rule has been shared by all the state, they all are talking about a scenario. Look, 8 hours plus 1.5 hour additional, including intervals and spread hours, meaning thereby. And the message is very, very clear. After continuous working of 5 hours, minimum half an hour gap need to be provided. And intervals as well as the spread hours should not go beyond 1.5 hour. Overall, one or two state is talking about 11.5 hours and 12 hours also. But substantial majority of the states are talking about not more than 10.5 hours. After 5 hours spent, half an hour interval need to be provided. And the chances are most of the states are going to work in the same fashion and manner.
Thanks, Atul. So hopefully there will be fair amount of alignment once the states come out with their final rules on this. Now, coming to Vineet, back to you. So the question is that under the Social Security Code, the acquirer of a business now can face a gratuity liability for the past period as well. So there are other compliance requirements under the codes. So in light of this, do you expect more diligence now on labor code compliance areas where private equity firms are investing into Indian companies?
Thanks, Alok. I think whenever we invest or the private equity invest, we generally do the labor and the legal diligence, right? So that's a standard protocol that we follow from a compliance point of view, as well as if there are any financial impact. Now, certainly as we do more diligence right now, any of these impacts, which are financial impacts, is part of the adjusted EBITDA. So it's not that I would say that we are going to do something very different. We anyway do it as a part of the diligence exercise, which will need to be done now with specific focus on any past liability, which is part of the adjusted EBITDA, so that the future is very clear. That's how I see it.
And a quick follow-up, Vineet, is how do you see generally the impact across sectors from your vantage point as an investor?
So I would say for people, manufacturing sectors which are far more, I would say legacy sector, the impact there is more on the retiral side, which is gratuity and leave encashment, where there are people working for a longer period of time. However, in a service sector or in a financial sector, I think the change is more around worker definition, because there are a lot of people, as a fellow panelist was also talking about, in the GCCs, or in a financial services sales team or the service team in the IT industry, there are a lot of people who will now get defined as a worker, and the impact of the overtime and the way they are currently managed from a time point of view needs to be relooked at it. So I think by sector it varies, but for a legacy manufacturing, it's more retiral part. I think there was another discussion around the gratuity related to contract employees as well, contract versus permanent employee on the core and non-core. I think a lot of companies actually currently do contract labor for core activities as well, which needs to be relooked at it.
Right. Agree, Vineet. It is going to be very different across different sectors, depending on the specific nuances of each of these areas we discussed. So, Amol, coming to you now. Let's say if there is an increase to cost of retirals, how would the parent organizations view such costs of the shared services and global capability centers in India?
I think this is
Amol, can
something
you
which
hear me?
I'm grappling with, and I'm having a lot of. Yes, are you able to hear me? Hello,
Yes. Thanks.
hello. Yeah.
Yes, Amol.
So I would say that I am also thinking about it, that how to present it to the parent organization with all the changes which is happening. But there are two three things which comes to my mind from that perspective. The first, I believe that first, the way I'm thinking is that I will first focus on the talent strategy, because finally it is the value creation for which a lot of our organizations are continuing in India. So that would be the first pitch which I will do, along with compliance as the second pitch in my mind. The third thought which is there in my mind is how can we do cost control within the GCC so that we can push for an offset out here. And the last push, if the first three does not work, then I am going to, thinking about reassessing the India allocation, which is there. So these are the four pitches which is there in my mind. But the way I am going to go about these also is, first I'm going to work on quantifying what is the actual numbers, which we will have to get. The second is, what is the mitigation plan? What are the different things which is aligned to the current rules and the act which has come in? How can we mitigate some of these costs? And then I will pitch up onto these four items which I talked about.
Got it. Thanks, Amol. So, Reshma, coming to you, how are boards looking at organization preparedness with this new law, especially when it is still evolving and may continue to evolve over the next few months?
Yeah, I think that's a tough one, Alok. I think, yeah, so I think from a board perspective, my recent experience has been that, I think board is looking at, of course, they first of all, I think they all agree that it's a good reform, right? But they also understand this is still, there's a lot of ambiguity around how, when, what, dates of implementation, etc. So I think they acknowledge that. But I think there are few things that the board is looking at. The board is, of course, interested to understand what would the workman definition shift the workforce. So how would it really change for us from our current design and our fabric? Yeah, they're looking at policies like overtime, leave impacts, gratuity impacts. So that's the financial part. I think the board is very, very interested to understand, are we going to use technology to do our jobs differently? Okay, so I think the board wants to understand, is there a better way to offset, some of these things, and is that an opportunity for us to further explore? The other thing which has interestingly come up is third-party workforce, right? So a lot of us do deploy third-party workforce. Now, they are not contractors, but we engage third-party as, as not our direct employees, but we do engage third parties to sell our products or do certain part of our jobs, right? So is there an opportunity to bring third party? Would that be an easy arrangement there? So I think those are the things which the board is looking at. Obviously, I think the biggest view or concern, or they want to more understand, is many of us, when we talk about board and we are listed, we are looking at creating a value creation point of view for our shareholders. So how will we continue to create growth, and how will we continue to create value for our shareholders? That's one thing, which is something which they are keen to understand. And obviously, if you're listed, then you have all the compliances to adhere to, and how do we keep that going? So I think in spirit, again, the board is very welcoming to the change, but obviously, there are multiple impacts on various dimensions, whether it is people, whether it is technology, whether it is our growth and products or our services, and obviously the financials. So that's how I would put it, a look at the moment.
Right, absolutely. I think the key question is, how prepared are you? What are your plan of action to, to comply with the new laws? So thanks, Reshma. Hemant, coming to you, how do you see many global MNCs who use global HRMS and payroll platforms try to implement new changes, let's say, to their compensation structures? Would they have to perhaps resort to some offline systems while they get the changes to the global platforms, which may take a bit longer?
Yeah, this is, I would say, the biggest dilemma that all the global organizations are in. And our design is also mostly kept global for the GCC model, so that it's least of deviation for each state, each country. Now, in India, the challenge that we have right now is, if all the states, for example, I am operating out of 6 different states, if all 6 states will publish their rules by the 1st of April, yes, no, we don't know. And if they do, at that point, maybe 3 states does and 3 doesn't. So what we'll have to do is make some offline arrangements, make some offline adjustments to start doing it, because we have to comply with the states where we have the laws published or the rules published. And at the same time, we'll have to work with our global implementation teams to get these changes done. So this is where I would say organizations, the global organizations, basically are taking advice from the big fours or from the experts in the industry like Deloitte or EY, or who are understanding this well and taking a future guidance. Because again, to Reshma's point, the board is concerned for every organization. The board wants to know a lot of things, and we want to probably don't overstep on something which can change in 3 months or 2 months or 4 months. So that's where we'll go and do some offline adjustments. Thankfully, wherever we have our payroll vendors, where the payroll or the entire system is outsourced, there we can have vendors support us. We don't have to do any offline adjustments. But where we are doing in-house payroll in HRMS tools like Workday or SAP, we have to do the offline adjustments internally to comply with the rules as the states start declaring them. But then, even if we have all the states declare everything on the 1st of April, still it will take a good 3 to 4 months to implement it, do a parallel run, do a test, and do all the UATs to make it live before we go live. So this is going to be a big change and big challenge, and definitely the technology teams are going to sweat out on this. The next 2, 3, 4 months are going to be planning, development, execution. So I'm sure all the GCCs are working on it.
Thanks, Hemant. So I think Vineet had to drop out because he had to catch a flight. So really grateful for him to join even in this situation. But coming to the final question to the three of you, and the challenge to you is you need to respond in not more than, let's say, 7-8 words. So Amol, starting with you, what would be one key, let's say, ask which you believe industry may be representing to the government as this law evolves over the next few months? We can't hear you, Amol.
I think he's muted.
Okay, I think
Amol,
Amol, we can't hear you.
Okay, I have tried to
Can you-
unmute myself. Are you able to hear me again?
Yeah, now we can hear you. Yes.
Now we
Okay.
can hear you.
So I would say, yeah. So I would say because I come from a knowledge industry, reward skills and not just hours would be my first, and second would be harmonization of the central and the state rules and timeline to implement.
Okay, Reshma.
yeah, I think for me it would be harmonizing the state and the central rule would be first. Second is I think we are into saving lives. So I think for our industry it becomes more important to really understand that it's not uh, leaning towards workmen more and really looking at the whole service mindset for the patients, especially in the life sciences space. Because to be very honest, I'm just going to use a little more word, Alok, here, because it could also lead to a more unionized workforce going forward. So that's another challenge that we need to understand under the protections, right, which we try to avoid, and we are moving away. So I think there are other elements in the manufacturing or even in the service space for us.
Thanks. And Hemant, final word to you.
Okay, both Amol and Reshma has taken my top two, so I would go with the one which is also important. Is uh, now as this is a evolving situation, and every organization is coping up with the laws, and we are a diverse country with different cultures and different governments having different approaches towards their workmen and their population. So, for employers, I would request or I would expect a safe transition period is given with some leniency. We should not be like looking at penalties or audits or inspections from day one. We should be given a safe, at least a 6 to 12 month period, because I mean we are expecting to start everything from 1st of April. But in my mind, I know it has never happened in India, and it's going to be a tough challenge, a steep upward challenge. So why not we get a transition period or a cooling off period for employers to implement everything and not put penalties. I mean, definitely we are expected to do and we will do, but not impose penalties or inspections in the first year.
Thanks, Hemant. So I think the government has acknowledged that point in some press releases about giving some time for industry to settle down with the new law. But thanks once again. Really appreciate Reshma, Hemant, Amol, and Vineet to join us and share your insights. It brings us to the end of today's discussion, and unfortunately, we will not be able to take questions from our audience, and we can deal with those offline. Thanks again to our panelists for a very engaging conversation, and special thanks to all our participants who were able to join us today. We would like to encourage you to fill out the short survey that will pop up on your screen momentarily and tell us what you think about today's program. If you joined us late, please note that this presentation will be archived for future viewing. If you feel that others would benefit from this webcast, please share the webcast via the share this icon, or have them visit the Dbriefs website. We will endeavor to respond to the questions submitted during the webcast in a couple of weeks. Also, if you think of any other questions or comments, please feel free to reach out either to me or to Atul. We would be more than happy to talk to you. At last, from all of us at Deloitte, thank you for all your participation in our Debrief webcast today. Goodbye.
Thank you.